Well, hello everyone. Welcome to Trading Price Patterns. This is one of the new classes for 2025. And we have taught classes on trading various price patterns over the years. Last year we had trading breakouts, we had trading flag patterns, we've had swing trades, we've had lots of different classes with different titles. But one of the frustrations is some days you're seeing inverted head and shoulders patterns and cup and handle patterns everywhere you look, and there's nary a flag pattern to be seen anywhere. And other days there are flag patterns coming out the wazoo, but it's really hard to find a breakout pattern. And so we've decided to just title this class Trading Price Patterns. And I am really excited to be at the helm. Last week I was in Maui and James Boyd taught this class for me, and he did a really great job of outlining, and creating a list of some of the price patterns that we'll be looking at. Things like price patterns, things like diagonal wedge patterns and symmetrical patterns, wedge patterns, and all kinds of things, inverted head and shoulders, cup and handles, head and shoulders patterns. So we're going to talk today about diagonal resistance breakouts of pennant patterns. So breakouts from pennant patterns. The markets are up today. And then we're going to look at different ways we can trade what we see on the charts. So I want to get right down to business. I am going to treat this as a companion class to the Monday and Friday trading a smaller account. And I'll talk more about that in a minute. We have Mr. James Boyd with us, riding shotgun in the chat today. So absolutely love James. He's a friend and a fellow coach. And so if you've got questions, please don't hesitate to ask. BJ is saying he's new. I'm thinking you are not new, but he's new to this class. You guys are all new to this class because this is only the second time that we've taught this class under this title. I invite you formally to follow me on X if you are not already doing so. My handle at @BarbArmstrongCS. If it looks like me reaching out to you, offering you a great crypto deal, a Bitcoin deal, education that I'm offering on the down low privately, that is not me. It's an imposter. Please take a screenshot and send it my way on X and I'll get them shut down. James is a prodigious poster and he posts so much great content. If you are not following James, man, you are missing out. So I encourage you to follow James as well at James Boyd CS. So be there, be square. Okay, we do stock trades in this class, but we also will be trading a lot of options. And know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. We are using the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn. It looks like, smells like, feels like real money, but it's not. And so it's a great way to become more familiar with the platform if you're new to Thinkorswim, and it's a great way to make sure you understand a trading strategy and your trading plan, and you've had a chance to practice in a simulated environment before you consider trading in a live account. There are some nuances and differences. One is that short options will never be called out early in Paper Money. That can happen in a live account. Know that all investing involves risk, including the potential risk of loss. And I think we've all, in all likelihood, had the opportunity to see that. Okay, so I've got a couple of quick announcements. We're going to do a brief market overview, and then we're going to spend the majority of our class today on placing new example trades because we reset the accounts at the beginning of January, and so we don't exactly have a lot of trade management to do yet. So we'll be kind of light on door number 4. Okay, so what did I want to say announcement-wise? Well, one, in-person events. There are going to be 20-some of those this year. The next one is in Seattle, and it is a 2-day technical analysis and option strategy workshop. led by the fabulous Mr. Ben Watson. You still have time to register for that. Then the next one will be the first weekend, a full weekend in February. So that will be in Atlanta. I will be attending that one. I've got my flights booked. I love having the opportunity to get out and meet you guys in person. So if anyone is going to be in Atlanta, if you haven't signed up, you can do so today. And again, that's another 2-day. First day is technical analysis, second day intro to options. And then we get to Scottsdale, where we've got this technical analysis and option strategy workshop, another 2-day event kicking off March. And so if you've never been to a live event, I encourage you to check it out. As a client, I absolutely love them. I would get on a plane and fly from Michigan to DC or here to the Salt Lake City area. I'd drive to Chicago. I'd go wherever I needed to go. I had a house full of teenagers, and maybe it was a nice way to get away from the kids at the time, but it was just so awesome to be surrounded by other like-minded people who, we were linking arms and figuring this stuff out together. So China is saying that they are coming to Atlanta. I can't wait to see you there. The other thing is that this is a new year, so live webcasts, if you haven't quite got your schedule down pat, if you're saying, like, I love James, when is he teaching? Great question. You can just pull up an instructor and you can see that James is teaching every day. Trading with technical indicators on Mondays, investing master series, and then if you're saying, well, what are you teaching? I too am teaching every day. These blanks are when I was on vacation. I was sipping pina coladas. And there wasn't any rain, so I didn't, there was a little bit of mist, but, I dry off just fairly well. Anyway, getting started with technical analysis. We're taking a new kind of take on that series. So if you weren't there yesterday, you'll want to go back and rewatch that. And then this trading price patterns is going to be a companion class to the Trading a Smaller Account, which is Mondays and Fridays. The reason next Monday is missing is because that's a holiday, Martin Luther King Day. There will be no live webcast taught on that day. Okay, so that is that. The other thing, someone asked about 10 minutes before we started where the mini sessions were. And if you haven't subscribed to the channel, you'll want to do that. And, when you first come in, if you're on the home page, it will show you whatever class is currently being taught or what's coming up next. If you come to playlists and you just have to scroll down and kind of keep your eyes peeled, I'll always be in these because I'm so far the only one doing these mini sessions, but I am really jazzed about this one. So how $5 a day invested, but I encourage you to not only watch this, but share this. Jack, yes, companion class means I'm trading it's out of the same account. So, this just got posted a couple of days ago, kind of on the down low when I was on vacation. But it's about the power of compounding. And so share it, with your kids or your grandkids or your neighbors or your parents. I think this is a really important message and well worth the watch. Also, I've been promising for ages to do an example trading plan on buy right covered calls. This is just one example trading plan for a buy right covered call, but it's finally here and up and live. So there's that. Okay, so let's get to the markets now. And look at that. So yesterday, there were, the bulls are pointing out the fact that this index is still up over 20% in the last year, right? The bears are saying, like, I'm playing I Spy with my little eye, and what am I seeing? If we're talking about a price pattern that makes the bulls nervous, here's it's not the tidiest, but kind of a Head and Shoulders. And I'm going to put a frown on that because that is kind of an ominous pattern. And then yesterday or Friday, what day is it? I took Monday off. So on Monday, it gapped down below the 100-day moving average, but today it's above. And yesterday when we were talking about this and getting started with technical analysis, the comment was like, well, is this a breakout to the downside? In which case you'd be, as a technician measuring and expecting it to go down about this amount, or is this a fake out? And it looks like the fake out may have won the day. Okay. Yeah. So, and up, not just a little, up like 1.5%. So gapped up on the open, and it's continued to move to the upside. So, this is like a ray of sunshine for the bulls. So, but we've had this consolidating pattern going on since when? Since really the beginning of November. And so if you wanted to kind of put that in a range, here would be our range. But looking good for the bulls. Okay, what about the NASDAQ? Well, we were talking yesterday about this pullback, and this index too, and if you want to see what the last year looks like, you can come down here to show price as a percentage. And if we go to the 1 year, this index up, 26%, not too shabby, but we've seen this pullback and, we were looking for a diagonal resistance breakout because it has been pulling back. And, today, might we have that? Well, we might. But is it a breakout or a fake out? Well, we don't really have confirmation yet. But what we do have confirmation on is that this index is up 2% today. So, a lot of sunshine for the bulls. Chicken Little is, resting for the time being. How about the Dow? Whoa, that's a gap up, isn't it? So this index up 1.5%. And, it is still up 15%, in the last year, but still below this 30-day moving average. And we do have this diagonal resistance breakout, but this was a pretty big pullback here. Oh, dang it. Can't see. 7%. Now, 10% would have put it in correction territory, if you want to get rid of your line. And how about the Russell? This is our small cap index, the biggest of the small boys. We've got about 2,000 in this index. But, when we look at this, it's still up 23%. And again, this is bouncing pretty dramatically to the upside today. But, it was up more. We've got a bit of a hammer. So will this continue? And again, it's between the 10 and the 30. So it's not exactly clear sailing yet. But this support level down here appears to be holding. Okay, and how about the VIX? Any guesses on what the VIX is doing? Yeah, falling. 16.6. And that's a pretty big difference from yesterday where it was over 18. Yeah. Yes, and the market could pull back again. Absolutely. Yep. And then which sectors have been strongest? Well, if we come and we look at our sectors here, and if you're not familiar with how to do that, like one of the mini sessions, if you scroll to the bottom, there's a whole section on Thinkorswim tips, and one is on how to create or customize watch lists, and this is one of the ones that we did. But if we look at the last 3 months, which has been the strongest? Consumer discretionary. Americans, we love to spend money, don't we? Communication services. So that's, the Verizons and the T-Mobiles of the world. Meta is in there as well. And then financials have been crushing it. This week we had a lot of financial stocks come with earnings, and they are really taking off. Goldman Sachs came with earnings today, gapped up. Well, there's a breakout. So we had this wedge, or pennant. And what we choose to call them is not as critical as recognizing the consolidating pattern and then the breakout either to the up or the downside. but Goldman Sachs came with earnings, JP Morgan, and I think we're seeing a lot of stocks in this sector starting to move in sympathy. Look at Bank of America today, and it hasn't even had its earnings report yet. That's tomorrow. So, kicking off the earnings season. Yeah. James, what are you doing? Oh, it's the year to date. Yeah, so this thing here is year to date. Bank of America up 7%. Like, given it's only the 15th of the month, like, that's not too shabby. Okay. And then who's been tanking? Well, materials, and so if we look at these, all sectors have been kind of pulling back, but consumer discretionary, a diagonal resistance breakout, communication services. I had drawn that line probably before I left, so we can toss that one. And it looks like it's recovering, but we still have this wedge pattern kind of, it's still, well, one might almost want to duplicate that. So we're looking at for it to break out of this downward range, right? Trending range on communications, financials. And again, sometimes you just have to kind of shake the Etch-a-Sketch and get rid of your lines and say, okay, new year, new set of drawings, a pretty dramatic jump today, right? Yep. And technology, this sector is still up, 33%, even though, it's in fourth place. It's been kind of consolidating. Okay, so let's go and look at a couple of different stocks. And I'd like to show some that are looking good, but maybe not quite there, because people ask me all the time, like, why did you pick what you did? And so I like to show a couple that, I might have looked at where I went, maybe not quite. And so when we look at Nutanix, which is a tech stock, we had a bit of an inverted head and shoulders pattern here, right? Do you see that? And it was a pretty big range, or you might say it was kind of like the Russian stacking dolls, cup and handle. And then that handle became a cup and a new handle. But the net of it is it broke out. And then we've had this, retraction and this support level, which I had drawn in this range, and support and resistance, like this resistance level, it's kind of a range. It's not a finite number, but it did break below that, which, not a good sign. And today it's bouncing. And so some might say, well, that is now old news. We have this diagonal line and it's breaking above that. But how many days has it broken above that? One. And so I'm still looking at that and going, is that in the breakout category or is that in the fake out category? Like my friend Vince would say, you want to watch it break out and then come back and test the ice. And if it breaks through, it was a fake out, not a breakout. So on this one, we're just going to hold and see. Because, what if it even goes up dramatically tomorrow? And we want to do a swing trade back up to the 75 level. That's still a $10 move from where it is now. So if we give up two of that to be more confident that this is actually a breakout, is that such a bad thing? One of the things that we have to wrap our head around is that we don't have to, if we're trading price patterns, and we can do that for a longer term investment or a longer term, trade where we want to buy and hold for, say, months to years. But if we're doing this with a shorter term view, we don't have to get the whole move. We can just get a little bit, or a part of the move. We could get 20% of it, 40% of it, 60% of it, and that can work out quite nicely. Okay. And then sometimes it's not going to work out well at all, and we have to plan for that as well. Okay. So with that one, we're going to wait. Okay, so let's look at eBay, because this was another one that I kind of looked at and said, in eBay, this would be consumer discretionary, I would think. I don't know how I managed to do that. Here we go. I can really manipulate this, can I? So when I first looked at this, I had drawn my line CUMSA, which kind of looks weird now. This is a straight line, believe it or not. And I thought, well, it's not really broken out yet if it's a straight line. And, and it came up and hit this resistance level 3 times. But then I looked at it again, and again, this is so much of technical analysis is in the eye of the beholder, right? When I looked at this, I thought, this is a big pennant pattern setting up. And, when we look at eBay over the last year, it has not exactly been leading the charge. But, up 60%, it's beating the S&P and the NASDAQ quite handily. Yeah. Yeah. So somebody is asking, are we going to review these trades in the next class? Absolutely, we will. Because I think half of the game is knowing when to enter, and this is actually not a game. I'm assuming that all of you are here because you're looking to make money, right? And so just half of the skill is learning when to get in. Just as important is learning when to get out. And so, when I looked at this one, I thought, okay, well, this is interesting. If we look at this as an entry, and we talked about eBay in our getting started with technical analysis yesterday, but could we do a swing trade? We could. Now, we have earnings coming up, February 26th, so we do have a little bit of time. What other type of trade could we do? Well, we could do, a 1 ATR. We could look at this number down here and say, hey, in an average day, this stock from high of the day to low of the day over the last 14 days has moved about $2.12. So if it moves up $2.12, we'll take the money and run. Or we could come up, we don't have to go all the way to 71.52. We could come up here to say 70. It's at 65.25 right now. And could we do that with a stock position? We could. Could we do that with an option position? We could. And so let's look at doing one of each. Okay, so let's look at, first of all, if we come to, an example trading plan, and we look at this and we say, if we were to come out to February 21st, not that we plan on still being in the trade by February 21st, but if we bought this, and this is one where we could buy a call. So could we buy this call at 65, which is the first strike in the money? We'd be paying $250 and are trading a smaller account. We're willing to risk up to $500. So if we did 2 contracts, we'd be risking about $500. Now, if we went with that 1 ATR strategy and we said, okay, let's change this to our scratch pad. And if we said, okay, so eBay, the 1 ATR on this currently is $2.06. If we come over to today. So if we say our 1 ATR is 206, then our target is going to be today's high. And we're going to look at today's high. That is 65.51 plus 206. So that's going to be 67, 67.57. Feel free to double check my math. Exit is going to be today's low, and today's low is 64.20. And we're going to subtract 206 from that, which is going to be 52.14. And so how do we put that in? Sorry, I just had something here I want to get rid of. Okay, so we're going to come to our trade tab. We're going to come out to February 25th. Now, do we intend to be in this come February? No, if all goes according to plan and this goes up nicely, we could be out of this tomorrow or Friday, or we could be out of it Monday. But we're giving it more time. And why is that? Because theta is less damaging when we are out more than that 21 days. And so the expectation is that when we exit this position, we'll have less damage from time decay. Okay, and so that's the logic behind going out that far. And we're just going to buy a single. Now we could type in buy an OCO order. This is just a different way of putting in an OCO order. So we're going to come down to advanced order, single order, first trigger sequence, right click, create an opposite order. And we're going to make this a market order because we don't know exactly what this option will be worth when we exit, but we're bringing up a conditional order and we're putting in both our target and our exit. And our target is to get out when it goes. I always use a conditional preposition, when it goes. You know, it really should be if, because it might not. And you know, we've seen already this year an example of one that did not. And then 52.14 is our exit if it goes below. And so when you scroll down here, it'll say if it's greater than 67.57 or less than 52.14, check, hit save. And then you can check this again when you hit confirm and send. Now we wanted to do 2 of these. How much could we lose when we're buying a call? We could lose all of it, the whole enchilada. So we could lose $516. It's saying what we could make is unlimited, is infinite. But the reality is we don't want to be a greedy guts. We just want a little win. So if it goes up by $2 and 6 cents, we'll take whatever that win is. Okay. And so we're going to put this in our long call group. Now, these are managed daily. So if it hasn't hit our target by the end of day tomorrow, then we will adjust the exit to 20 cents below tomorrow's low. And so this is where we have the most risk, because tomorrow, if tomorrow's low, is that 52? Oh, what was today's? Let me just check that. Should that be 62.14? 64.20. Let me just go. I'm going to go and edit this. Our low today was 64.20, so this should be 62.14. Glad I caught that. And this is when, you know, when I was looking at this, I'm thinking, okay, it's trading at 65. It's $2 up or down. That candle wasn't that dramatic. So why would this be 52.14? Oh, so I changed it here. I didn't change it on the order. So how do I change the order? I'm going to come back to my sprocket and make this 62, save, confirm and send, 62.14. Okay, that's better. Put this in our long call. And this is a 1 ATR. So that if you're looking at how to manage it, when you look at your calls, a swing trade has a different set of management rules than a 1 ATR trade. And so, you know, just if you needed a reminder. So we're putting that in. Okay, so there's our first one. Well, what if we wanted to do this as a stock trade and we want to do it as a swing back up to this previous high? Let's say we make it $71. Well, in this account, we don't want to do more than a $5,000 position. And so we would bring up our calculator and say, okay, if I could have a $5,000 position and I divide that by this current price of $65.35, I could buy 76 shares. Why don't we just make it 75? So if we buy 75 shares, now, if this doesn't go according to plan, when might we want to exit? Well, our, technical belief here is that this support level is going to hold. This is our expectation, is that this is going to hold. Notice I'm not using the word hope. Hope is a 4-letter word, right, my friends? Yeah, we're not using the word hope. But if we say, okay, the low yesterday was 64.20, 64.27. Isn't this fascinating? 64.20. So if we use 64.20 as our support level and say, okay, if it goes 3% below that, if it hits 62.27, it's not going in the right direction. So that is going to be our stop, is at 62.27. And our target is going to be 71. So we're going to come to the trade tab. We are going to buy shares, and we are going to buy custom with an OCO bracket. We're not buying 100 shares. We're buying 75, and we're turning our firecracker into a paper clip. And then when I hit enter anywhere, it will, make these the same. And then we're going to make our target here 71. You might want to make it like 69.89, because often it'll get really close to a round number. So 60 or 79, 70.89. And then our stop is going to be at 62.27. 62.27. And we're going to make both of these good till canceled. And why are we buying 75 shares? Because our max position size is 5,000, and our max risk per trade is 500. And so if we look at this, we're risking just over $3 a share. So if we take this 75 times 3, is that going to be below 500? Yeah. Even though there's, how did I do that? 75 times 3. Yeah, 225. Even though there's no guarantee with a stop that you'll get out at the requested price, it will trigger a market order, and we could end up, out at something lower than that. Yes, it was 60. Did I mess that up again? If it was 62.14, yes, we got that. Speak truth. Thank you. Yeah. Okay. So, and then we're going to compare this. So this is a stock with a target, and we're going to compare to the 1 ATR trade. Okay. Okay, so let's look at Chewy. So yesterday, we did a trade on Chewy, and we looked at this, pennant pattern. And, the reason we have these lines here is because if you want to place a target on something, you can measure the width of the pennant and then put your target above. And if we need more space at the top here, we can come to our price axis and say, you know what, we need more room at the top. And we don't need actually any room at the bottom. So we're going to change that. And so we can see where a target might be, somewhere in this neighborhood of 41. But, we saw this breakout, and then it came back and kind of cruised along the 10-day moving average. Today it's, it's up almost 5%. And so could you say, well, I think we've missed, we just missed the move. But could you also look at this, because we did this as a stock trade, which gave it more time, we're on the other side of earnings, which, happened in December. So we won't see earnings again till likely the beginning of March. But if we see this as uptrending, we might want to come and look at the news. Just say, what kind of sentiment are we seeing, from the analysts that look at this? Well, they've raised the price target to 42, Mizuho. Evercore raised the price target to 47, Morgan Stanley to 40, Evercore to 47. So analysts seem to be pretty bullish on this. Could we do a long call vertical? Yeah. And so, yes, you could call this, well, some might call it a rising wedge. Yes. Okay. So let's look at this, and it's currently trading at 37.84. So we have two choices, because if we come out to February, which is 37 days, we have a 250 wide strike. So it's just at 37. So it would have to go at or above 40. And again, our guidelines, and if you're not familiar with it, if you go to the trading price, the mini sessions, there is an example trading plan. But if we go with this 37.50 and the 40, it has to go 240 and stay above. We'd pay $1 for that. But our goal, our example goal in that trading plan is to make 50%. And so it might not even have to go above 40 for long for us to reach our target, which would be about $1.53. And you might say, like, are you nuts? You're leaving $1 on the table. And the old me would have said, yes, I think you're crazy. Like, because what this is saying, if you look at it, is our max loss is $1.03. We could make up to $1.47. And we're saying we're happy with 50 cents. Yes, we're happy with 50 cents. Tell you what, when you're watching the Detroit Lions win their football game on Saturday, yes, that is a preemptive close. When you're there with your friends chatting and say, can you believe this woman suggested that I place a trade and get out when I've made a meager 50% in, 1 to 3 weeks? Like, I don't think I'm ever going to go and watch that class again. Like, they would be throwing pretzels at you. Come on. Like, that's a pretty good return. And so we're going to go for like little wins. We're going for little wins, right? We're not going to be greedy. If it keeps going up, could we place another trade? Yes, we could. Yeah. So first trigger sequence. How many of these could we do? We could do 5. Now, how much could we lose? All of it. But our goal is, if it goes up, AP 514, please speak not their name. It's not Texans. Well, they're not playing the Texans. They're playing Washington Commanders. So you can say go Texans. That's okay. Okay, sorry, I digress. Okay, first trigger sequence, right click, opposite order. So we're going to make this 106 times 1.5 is 159. Let's call it 160. So when this gets to 160, and yes, we're leaving $90 a contract on the table, we are going to say, hey, we're happy campers and we're good. So how much could we lose? $535. So we might say, hey, it's early. We don't want to risk that much. Or we could say we're okay with that. Max profit is $715. We're saying, if we can make 250 of that, we're going to be happy. Long call vertical, fire in the hole. Okay. Now, we don't have a lot of time left, but you want to see if we could do one more, squeeze in one more? Yeah, somebody's saying I take nachos. If they've got cheese on them, I don't want you throwing them around in front of my TV. Yeah. Okay. So Google. How about we come and have a look at the Goog? So now here's one that's interesting because we had this kind of cup and handle pattern. Do you see? Do you see what I see? And then it broke out, and then it's been kind of consolidating. And today, this really has bounced. Now we've got earnings coming up on the 4th. So we're a little bit close, aren't we? But it is a nice bounce. So some might say, well, that's a little too close for comfort. Others might say, you know what? I realize earnings is coming up on the 4th, but I've had a look at, what the analysts are saying and what the chat is. Goldman Sachs has raised their price on this to 215. I mean, it hit a high of 201, so it hasn't come close to that yet. And so if you decided to do this, you might say, well, no matter what, I want to be out by the 4th. And maybe with this one, you put a more modest target. Just because our target is typically 50% doesn't mean we couldn't make it 25, right? Yeah. So if we came to our trade tab, now these options are expensive. If we come out to February 21st, the at the money strike is 195. So we couldn't just buy a call. Now, what we could do is we could come out to the first strike out of the money and we could do that one ATR trade again. And just say, hey, if it moves that little bit, it just has to move to the top of that wedge and we would be okay. And so here, if we do this, we're risking how much? $420. How much of it could we lose? All of it. Does it trade more than 1 million shares a day? Check. Do we have lots of volume on the options? Check. Do we have a tight bid-ask spread? Check. So check, check, check. So if we come here and we say we are going to buy, and how many are we going to buy? 1. And then what would our target be? Well, our ATR is 488. And so, sorry, I didn't want to detach that. I wanted to switch it. Scratch pad. So this is Goog, and it is the one ATR is 488. And so our target is going to be today's high. And that is pretty close to where it's 195.43. 195.43 plus 488. And I'm going to move quickly because we're almost out of time here. So 488 plus 195.43, 231. Let me know if I messed that up. As we can see, I am not perfect. Mistakes can be made. Part of that human connection. And then our low of today, 191.86. So on Friday, in our trading a smaller account, I will show you how to adjust the stops if they haven't hit the targets. So this one was, what was that again? Because I've already done the math. 191.86 minus 488 equals 186.98. Okay, so we're coming back to our trade. First trigger sequence, right click, opposite order. James, are you telling me to wrap it up? And then we're putting in our target and our exit. So always the target first. And I mean, you can do it any way you want. I just like to do things in the same repetitive way. I think that it makes us less prone to error. But as you can see from the last trade, it doesn't eliminate the possibility of errors altogether. 186.98. Hit save. Confirm and send. How much could we lose? 420. Our target, our price is 195, $5 above. That makes sense. Or about $9 below. And we're putting this in our long call group with a 1 ATR target. Okay, and that's a wrap for today, folks. We are out of time. So if you haven't subscribed to the channel, please hit subscribe. Please hit the like button. It helps move things up in the algorithm so that more people can find this content. It also lets James and I know that you found this valuable. Like, subscribe, follow us in the land of Twitter, Barb Armstrong CS, James Boyd CS. That's a wrap. And check out that compounding little video for me and let me know what you thought. I'd really appreciate your feedback on that. That's a wrap. Have a really awesome rest of your day, everyone. Take care, and I'll see you in a webcast coming up soon. Bye for now.